Gold has once again surged to a record high. So what's fueling the move? Who's driving the rally? And how much higher could it go? I'm Johanna Bota, and here to help make sense of it all is Rhona O'Connell, Head of Market Analysis, EMEA and Asia at StoneX. Welcome, Rhona.
Lovely to see you again. Always a pleasure to be here.
Lovely having you, and especially after a day like yesterday where gold hit an all-time high, and let me get this number right, $3,578. So what sparked this jump?
Well, first of all, I'm going to hold my hands up, and until yesterday, I've been sticking to my position, which was that I thought that the high had been put in on the 22nd of April because we'd had 18 months for the market to get overcrowded, etc., etc. And I modified my position ever so slightly a couple of weeks ago, saying, barring a black swan or something awful humanitarian. So I'd set myself up to actually think straight about these things, and then I failed. What I missed was the potential significance of the president's efforts to fire Lisa Cook from the Fed board, and all the different ramifications that could have or may not have. Who can tell? We don't know yet. But that, I think, was the key catalyst in the latest move, against obviously a background of rampant uncertainty in just about every different area you can think of. But I think that's what's triggered it, because it's all about Fed independence or not.
And when you look at this surge, who do you think is driving the charge? Is it governments? Is it investors? Is it buyers abroad?
Across the board, everybody and anybody, I would say, with the exception of retail purchases, because it's too high and they've gone to the sidelines. They're always very important in terms of helping turn trends, but they're much less important in terms of the overall scheme of things when you think that typically over the course of any 12 months, just the over-the-counter spot market, forget the derivatives, but just the over-the-counter spot market, works out pretty consistently at around about 100 times a year's mine production. So it's all the professionals that are doing this. Plus, of course, when you develop a move that became as swift as that one did, that entices in the momentum traders and the CTAs, and that becomes a vicious circle as well.
So I guess my question is, if gold keeps climbing and the dollar keeps sliding, what does that say about perceptions of the US economy?
I think we're already seeing it in the sense that we've got gold on a bit of a tear. Silver, likewise, that's woken up. And the bond market. I just look at the way the bond market is steepening. I don't know how many of our viewers understand about the bond market. I wish I knew more. But what I do understand is
what I do know is that they're selling off.
Exactly. They're selling off at the long end.
Yeah.
And there's some buying at the short end, because that the implication there is that people are thinking about interest rates coming down. So it's interesting to hold the bonds, to kick off with the 10-year rate. But they're selling out at the long end because they're concerned about inflationary implications. Yeah. To my mind, the most important thing at the moment is uncertainty and integrity within government, and the extent to which also we see the continued split between the legislative, the executive and the judiciary, because that's what the Constitution is built on. And if those demarcations become any more blurred than the president would appear them to want to be, then I think you're going to see an even bigger exodus out of bonds, and that has implications for the dollar, and gold will be probably the primary safe haven.
Then $1 million question, and
it's not going to $1 million.
Okay, I love playing this game. I wasn't going to go there, but how high do you think gold can go, and what might push it one way or another?
Well, if it doesn't correct, it is correcting a little bit now, then the move becomes ever more fragile. I'm not a technical analyst, but the last time I looked, which was before it got up to 478 yesterday, sorry, 578, I think I was looking at the next level of resistance on a Fibonacci basis was 625, something like that. And at some point, it's going to have to turn, because otherwise it's dancing on air. And the higher it goes at this kind of rate, the faster it'll fall.
So we can expect a lot of volatility is what you're saying, because I don't see it going down. Okay.
There's enough uncertainty around everything that if it does come down maybe $200, $300, $400, which is perfectly viable given the size of the move it's had.
Yeah.
And particularly once you get back into that horizontal band, which it had enjoyed since April, which is sort of between 2,800 and 3,400, then you're likely to find some support there, because that's an area of congestion on the charts. And as I say, there's enough uncertainty in all the different spheres that you can think of that there will be people who will be piling in at that stage, if not earlier.
Thank you, Rhona, for all your insight as always. We will interview you in a few months and see where we are. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.